Okay, hello again. Um, I hope you have been through the introduction to the bank reconciliation. That was my first video. And so now I'm going to take you through a little longer problem related to bank reconciliations. And we're going to work problem 5.4a, exercise 5.4a in the back of chapter 5 in your textbook. So I have um, the problem over here to the right. And first of all, we're going to just take each item into the reconciliation to see how that works. So as it starts out, this is at the end of October, and we are MBC Corporation, and currently we have a cash balance of $47.36. So that's the amount that we have in our cash account. And we get a bank statement for the end of October, and it says that we have $7,016. So what we're going to do in the reconciliation is we're going to we're going to add and subtract to each of these numbers to bring both of them up to date. And when both numbers are completely up to date, then the two should equal each other. So let's go through the steps. First of all, it says we have the bank statement included a debit memo of $45 for a new set of company checks. So the company is charging us $45 for a new set of checks. That's a debit memo because remember we said that our account on the bank's ledger, our account is a liability, which would have a credit balance. So when they debit our account, they're reducing our balance. So they subtracted $45 from us, and we need to do the same to bring our number up to date. So I'm going to subtract $45 from our balance in the reconciliation here. So for each one of the items that we go through, you want to ask yourself, who has already recorded this item, and did they do it correctly? If so, you need to update the other party. If they did it incorrectly, then of course you need to fix it on the books of whoever did it. Okay, item B, cash sales of $918 were deposited and correctly recorded by the bank. However, the journal entry to record this amount incorrectly debited cash for $981. So we being MBC, we had cash sales of $918, but we incorrectly got those digits turned around. That's called a transposition error. And so we recorded $981. We recorded too much cash. So we need to back that back out. So we're going to subtract the difference there of $63 from our balance. By the way, just as an aside, anytime you have a transposition error, meaning that you get a couple of digits mixed up in the order, the difference between the right number and the wrong number will always be evenly divisible by 9. It's kind of a nifty little trick. So you can see 63, of course, is divisible by 9. But test that out. Just pick any number, whether it be 2 digits or 3 or 4 or 5 or whatever, using the same digits, but mix up the location of them and then take the difference, and that difference will be evenly divisible by 9. Okay, item C, checks outstanding at October 31 were $23.86. Remember, an outstanding check is a check that we've written, we've already recorded it, but it's still out there. The bank has not processed it yet. As soon as the bank processes it, they will subtract it from their balance, and so we'll do that here to update the bank statement balance. Item D, the bank statement included a credit memo of $2,045, which represented the following: $2,000 note receivable plus interest of $60 collected by the bank on our behalf, and then the bank charged us a collection fee of $15. So what happened here is a customer owes us some money on a $2,000 note receivable, and instead of sending the money to us, we had it set up where they would send it directly to the bank. It's kind of like a direct deposit. So the bank collected this for us, and the bank has already included this in their number. So now we need to add that to our balance. And so the total that we're going to add is $2,045, but we're going to do that we're going to break it up into its components. So that consisted of a $2,000 note, $60 of interest, and then reduce that by a $15 service charge. And being a minus, you might think it would go down here, but all three of these belong together. They're all part of one transaction, so I would keep it up there. Okay, let me move my picture here. Item E, the bank statement included a monthly service charge of $30. Again, this is an amount the bank is charging us for, so we're going to subtract that from our balance, $30 service charge, to update our records. Item F, the bank statement included a canceled check number 322 for $406 to Alpha Company on account. On the company's books, however, meaning us, the check was incorrectly recorded as $460. So again, this is a transposition error. The difference between the $460 and the $406 is $54, which is divisible by 9. And let's see, this was a check that we wrote for $406, but we recorded it as $460, so we subtracted too much from our cash. So we're going to add that $54 back. So we're going to put that up here in the addition part for that recording error that we made for that $54. Okay, a couple more. Let's see. Item G, deposits outstanding were $1167. So this is where we made a deposit. We've already recorded this, but we didn't get it to the bank in time to get on the bank statement as of the end of that day. So maybe we put it in the night deposit box on the 31st of October. As soon as the bank gets there the next morning and opens that up, they're going to add that to our balance, and so we're going to go ahead and add that for them. Outstanding deposits, $1167. Okay, let's see. Item H. Included in the bank statement was a canceled check for $580 written by NBC. Well, we're NBC. So the bank incorrectly charged this to our account. So it actually that $580 actually has nothing to do with us. So the first thing we want to do is call the bank, make sure they recognize their error, and then when they agree, they will add that amount back to our balance. And so we're going to go ahead and add that back here to correct for that bank error. Then we have one more item, which is a debit memo. Remember, a debit memo, that means they are charging us, reducing that liability to us for $320 for a check marked NSF from Beta Company. $320 NSF check from Beta Company, one of our customers. So what happened here is a customer gave us a check. We deposited that $320. So that's included in our number, and now a few days later we're getting that check back from the bank, indicating that it's not any good. The customer didn't have enough money in there to cover it. So we're going to subtract that $320 back out of our balance. So the bank's already recorded it. We're backing it out of our number. So that's everything in this problem. And if everything is up to date, we should reconcile, which we do. And I don't know if you felt goosebumps when we did that, but that's a pretty good feeling when you worked a long problem and it all comes out okay. So that's the reconciliation. Now remember, in the cash account, we still have the 4736 that we were trying to reconcile. Everything in this column needs to now be recorded in order to bring our records up to date. So the bank reconciliation is just an organized worksheet where we figure out why the numbers are different. But we still have to go through the recording process of putting all these things in the journal and then posting to the ledger. So I've got that on this next page. So here's the same reconciliation. And then over here I have recreated a journal, and we're going to just come down this list and journalize everything that needs to be recorded. Now these first two we're adding to cash, so that's of course going to be a debit to cash. But in a journal entry you have to record everything, all of the different debits and credits, and remember the debits have to equal the credits. So on this one, this was for a $2,000 note receivable, so that would be, we would credit that receivable for $2,000. Interest income, it's kind of like a revenue account, it's an income account, and we would credit that. And then we have that service charge, which is an expense, which is, expenses are always debits. So there would be the complete journal entry for item D. The next item, item F, it was a recording error on check 322, $54. So again, we're adding $54 to cash. So we know that's a debit to cash. Now this one, let me look back at the problem. Item F, that was for a check that we had written on account. And so when we recorded that, apparently we not only took too much out of cash, but we reduced the accounts payable by too much. And so we need to add that back. So we'll credit the account payable for $54. That's kind of a weird looking entry, debiting cash and crediting accounts payable. But remember, all we're doing is correcting an error that had already been recorded. Okay, so now we're moving down here into these items that we are subtracting from cash. So I'm going to go ahead, for each one of those, we know that anytime we subtract from cash, that's a credit to the cash account. So I'm just going to go ahead and record each of those. So we know that what we're looking for now is the other side to each of those journal entries, which would be a debit. So for the first one, we bought some new checks, or they charged us for some new checks. So let's put that into office supplies expense for those new checks that we purchased. Item B was a recording error on cash sales. Remember, we had recorded too much in cash, which means we also put too much into sales. So we need to reduce that. So we're going to debit the sales account. Now that looks really weird because sales, a revenue account, is always credited. So remember, what we're doing here is we're simply reducing the credit that we had mistakenly recorded before. So we're just correcting an error. The next item is a service charge, $30 expense. I've just put that into the same service charge expense that we had recorded up here when the bank did that collection for us. And then finally, this NSF check from Beta Corporation for $320. Remember, this customer gave us a bad check. They still owe us the money. And so we're going to put that back into accounts receivable, indicating that, again, they still owe us, and so we'll try to collect that. Okay, so that completes the problem, and I'm going to send y'all this Excel spreadsheet, and on the last tab, I have the whole thing put together, and I've color-coded it just so you can kind of see when we post each of these debits and credits to cash up here, it updates the cash account to equal the balance that we had reconciled to. So, that's how you reconcile a bank account, and I hope you'll do some practice. Read the pages in Chapter 5, do some homework, and I think that should go pretty smooth. So, have a good day.